Hey guys, hope all of you are doing well. This is a quick update on the trades that were posted and a little details of how you should understand the trades that I post in the future. So remember, what we do is called wave analysis. So if you're in my group, you would be well equipped to understand the charts as they go, because you will have the knowledge of wave analysis, how to identify patterns and how to recognize what the chart is going to do next. Again, it's wave analysis, not straight line analysis. That means sometimes the waves become more complicated than what you expect them to be at the very start of its move. So by the way, if you're interested, go to my Facebook page, ProWave Edge. I've changed the ProWave Trader to ProWave Edge. Facebook page is the same page. Just go there. I'm doing a free 5 days free webinar for a broker. Today is the last day, and it will be interesting. You should come there. So let's go with the Cadian. Remember when I post the Cadian, I started by posting the Cadian that this is where we expect this move to go down, because I'm looking at a 1, 2, 3 wave corrections. I also said to you, if this one goes down very slow, we will expect it to make one more up, and then we'll expect it to go down, because it will still be part of a corrective structure that we know. It can still get more complicated than that, but I'm not going to go into that because we don't have time for that here. This, in the 4 hour, this is what I'm expecting it to do. And when it comes to this level, anywhere beyond here, there's a high probability of it going back one more up there before it comes down. I'll show you that on the higher time frame. Or if we don't go back, we're literally going to be breaking through this structure straight to the bottom here, which is about the 270, where I expect it to go, and maybe even lower than that. But let's start with where we are right now. Let's go back to where we are right now. At this point, it will, minimum you would do is it's going to come to this level, might go there, come here, or might come straight here, right? Either way, we are going to break down and give you this. So if you're on a 60 minutes, you should be in that trade already. I'll show you the trade in the 60 minutes. But in the bigger time frame, what you're looking at is we've got 1, 2, 3. Remember, I showed you 1, 2, 3 in the 60 minutes. It turned out to be 4, 5. This could also turn out to be 4, 5, and then come down. I hope you understand that. This is still a corrective structure, and it will still come down. This is your impulse. So don't jump and get all worked up. If it comes to this level and it goes there, from here to here is a huge trade for you if you get it. So let's go down. We're going to go backwards now so you can start to understand what we do. This is the trade I'm looking for. And then at this point, it would either go to this level or it will go to that level. That would be a separate trade of its own. That might be even more than one trade. So in the 1 hour, we're in this consolidation, and this would come down here or go there. So what you're looking for is your sell setup there when you go into 1 hour. Remember, I told you when this started to go up, I expected to come and break this stop, which is what it did, and now it's going down. You could have been in that trade already. There was a very small flag there, but you don't have to do that. Wait for this to make a flag. It's going to make just like these corrections, just like this one, just like, let me see, a number of them that you can find. For example, this one to the upside, we didn't buy that because we know it's going to come back down. And, if you get a little correction like that here, what you'll do is you'll take this straight to this level, put it to positive. If they decide to bounce here, you'll get a correction like this here before you go back up. But I don't think it's going to go back up. It's pretty much time for it to drop, right? But there's many reasons why we expect it to drop. I'm not going to go into those reasons. So if you get a correction here, wait for that correction now. And then you take this straight to the downside here, put it to positive, hope it comes here. And then from there, it's either going to go back up or it's going to drop. See? It's pretty easy when you understand what you're looking for. So when I post a trade at this level the first time and said, there is a trade set up here for you to go, that was a positive trade. You could have gotten out for break even. You could have sold this one, the second one. You could have sold the second one here and get out for break even. You could have sold the third one and make profit. I told you about this one, selling this to make profit, make some profit here. And now this is the similar one. Take this trade, this level, and likely it's going to break out now. And from this point, either up or down. See? I hope you understand it, and I hope you can make use of this. By the way, if you don't understand this, come to today's webinar. I'm going to give you a little more detail in it. It's going to be 3 p.m. Dubai time. You can register and come. It's on my Facebook page. And if you want to understand this more detail, Skype me. I'll give you the details of how you can learn this stuff. My traders, I don't have to go so much details when I tell them. I said I'm expecting Canadian to go down. I can promise you there's a lot of them already in that trade. Because we spoke about this yesterday, look for the sell setup, and they're probably already in the first little correction you have, which is this one. You got this first little correction, you're already in that trade. You had a second correction, you're in that trade. Those trades are at break even. If they go back deep like this, worst case is you get break even in that trade and you start selling this one now. What you need to wait for now, you need to wait for the bigger correction because those two small ones are gone. You have to wait for this, a bigger one here, and then you take the trade. See? So let me go to another one that a few traders are getting worked up on, is the S&P 500. Remember what I said, I'm not interested. When I post the S&P 500, I'll tell you where I posted. I posted the S&P 500 when we had 1, 2, 3, this point. The sell was there. You got break even. The sell was there. You got a little profit. I said this correction will go up one more. You sold here or anywhere there you sold. Even if you sell it here, that's a break even trade. It goes there, it come, we identified this, we said it's gonna go one more. Are you interested in those buys? Let me just show you what would have happened with those. Let's say you bought here and you had a stop here. Congratulations, you lost the trade. Let's say you bought here and you had a stop here. Well, that came back here and now it's coming back. And if you didn't take profit and there's no profit to take here, you're gonna lose that trade because there is no profit to take there. It didn't move. You're talking about 2 pips movement. Right? I'm telling you about movement that are huge, that are going to give you profit. So if you get a correction here today, we'll look for this one down. When you get this trade, remember, it will make one more because we broke the top. That means the pattern that was created is much bigger, is a running flat. You will get this trade as soon as you get a correction. Wait for the correction. Again, wait for the correction to confirm the trade. If you get a correction here, you're going to get this trade. And then expect that to go back up and make a new high. I don't know whether they will break the top of the bigger one. I doubt it, but if they break that, the next move down will be huge. And you will look for the same type of setups to trade down the bigger move. This is the move you're in. And again, let me repeat to you. This is not all the correction. That is just one part of a 5-year correction we're going to be in. You may say, well, why do you think it's a 5-year correction? Well, let's go and look at a previous correction like that. I mean, these things I'm not supposed to be doing here, but I'll just educate you a little. So this is what you're looking at. See that big move? Let me put it to the weekly so you can see it. You can understand a little about wave analysis. See that first big move down? That was a big move, just like this one down. You want to know how long it took from here to here? Well, all you have to do is go and do something like this. See that? This one started when? In March, 20th of March, 00. And it ended 20th of March 09. See that? You can look at the bottom where the two blue parts are, right? You can see that. 00, this line. If you put a line here, you can see this March 00 and this is March 09. That's a 9-year. Down, up and down 9 years. We just actually fell. How long do you think we're going to be in this sideways move? So it's going to have a lot of parts, up and down and sideways and up and down until you see I have this is going up more, which means we are going to go up more. Maybe 9 years from now, maybe 5 years from now, maybe 10 years from now. I don't know exactly. There's no exact time when it's going to go, but it will be a bigger. This was a very simple pattern. This is going to be a very complex pattern. Again, even if it breaks the top here, you try buying at the top here, you will learn something about trading. So what is going to happen? The next move down could be sharp. The next move down could be really, 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 really slow. It doesn't matter. You're going to get a sharp one up. You're going to get another one here, and then you're going to go. If the next one is sharp, you're going to get a slow, very slow one going up. You're going to get a sharp one down, a sharp one up, a sharp one down, and then you're going to go. So in all, that thing is going to take quite a long time. Now, there are rare cases where it's going to break the top and make a running flat. So what does that mean? I just showed you a running flat on the Canadian, which means it breaks the top here. It comes back down very slow like this. Go up, comes back down very slow like this. Go up, comes back down very slow like this. Go up, drop. Again, they will drop like this to complete this pattern and then go up. See? So you will get progression here, but it's not going to go very far. You're just going to get a lot of sideways move, drop again, and then go. This could take 10 years or 5 years or 7 years. So what pattern it is going to make in the future, I don't know. But I will identify each part of that pattern, and then we will eventually see the bigger pattern as it comes into light. Just like right now, the trade you're looking for is within this small pattern. Originally, we thought this, like these running flats, see them? Originally, we thought this one was going to make 1, 2, 3 and come here. Well, once we break the top, it's just going to come here and it's going to make a new high. That confirms to us that you're going to get a new high. And then from that point, we will see whether they come down fast, whether they come down slow, or even if they make another correction and go break the top. See? And if you understand wave analysis, you start looking at for these things and you anticipate what they're going to do. It's pretty easy. It's easy to recognize. It's easy to do. So I hope that helps you. There's a number more I can go through. I don't want to make it too long. Let's see the US knockers one, for example, I post. And as you saw, they broke the low. Just like this is a running flat. So I expect this to go back up there. See, it's going back. But once it goes back up there again, this one will make a new low. The reason this one will make a new low now is because we broke the low, and breaking the low means you're making a running flat. They will make a new low. So eventually this one will go here and it will come back. The big move will be to the downside. If you get that trade up, good. That trade up might not be very sharp, but if you get it up, good. But you can then look for another trade to the downside because that is confirming that it's going to get in. Rarely, sometimes this one goes above the top and give you an expanding flat before it comes down. So if you get a buy set up here, great. By the way, if you work with wave analysis and you're expecting a move to the upside and it didn't go, good. You're not in the trade. You're not losing anything. All you have to do is reassess what pattern you think it was going to make and what pattern it's making now. You're not losing anything. And that's a good thing. The analysis prevents you from making losses that way. You will wait until you get the right setup to show you the right direction, and only then you get in the trade. So if we were looking for a buy and we didn't get a buy setup, no big deal. I was not interested in the sell because you don't know whether they're going to break that. Running flats are common, but they're not that much that you think it's going to do that. Let's see if we get a setup here for a buy. Let me go through a few more very fast for you guys. I think one of them I post was $1 yen. That's a very interesting one, and it's still very valid. Keep your eyes on it. So $1 yen when it was coming down here. I think when we were in this one, somewhere in here, I told you, watch this piece. It's going to break, come here, and then start the up move. Well, they make an expanding flat. We drop lower. We saw that. I told you they're going to come beyond this point, and the update has that they will come beyond this point, and then they might start to go up. Well, they didn't go up. They started to go up. If you bought here, you made money on that part, but then they come down, go up, come down, and we figure out that flat. Come down here. Now, again, it's going to go up. Again, I will say it's going to go up because what I'm looking at is this. Is a bigger pattern that we have here. Can it come and break the low and then go back up? If it does that, it will make a running flat and this will go down. We will not get the big move. So let's look at a bigger picture for you so you can understand that. You have to look, you don't just look at one time frame to make the decision. You look at more than one time frame. So we have this huge correction we're in here. Very huge correction. That's your first impulse. We've got a sharp move here and it seems like they're correcting here. We don't know that for sure. But this move could still work its way down like this, go back up there and come back down here, make a new low, and then give us that trade. That is very possible. You can see how much times they've done it. Based on the bigger patterns we saw, that is possible. So what you would look for here is what happens in this piece. This one will go back up. It will break this top. If it comes to this top here, just broke the top and decide to come down like that, this would be a flat. And then this trade here would be a very good trade because this trade could either come back to break these lows or it could come back to break the bigger low. Either way, when it break one of those two, we're going to go back up. For us, if they come down, I would rather they break the bigger low because that means the big weekly moves to the upside will start. I don't know whether it's going to do that, but I will follow it and I will look at the trade. If this comes and break the low here, we'll go back there and we'll definitely come down. If they don't break the low and they go up, well, there's no, it could just take off. So you're looking for the buy situation in any case. Go back to the 1 hour. What is the trade on the 1 hour? It's always about what is the trade on the 1 hour. Right now, you were getting short-term sells. I'm not interested. Even if they go break this low, I'm not interested in that sell. Because the risk to reward is not good. That's not the trade you're looking for. I'm interested in the buy. The buy will give you, if this drops here and give you a buy setup here, the risk to reward on this would be about 7 to 1. If you take a trade here expecting it to break the low and they don't break the low and go, you will end up with a loss, just like the S&P 500. Somebody said, just wait for it to pull back and buy. That's true, but where and when? And, if you're waiting for it to pull back 50 pips to go 5 pips more above the top, that's not a good trade. That's really a bad trade. And if you take trades like that, you would know you end up struggling most with them than making money. You're always looking for the next impulsive move that has a good risk to reward in it. I hope that makes sense for all of you. Now, I don't want to make this video too long, so I'm going to stop it here. I will post more videos for you maybe over the weekend with setups that I see. Remember, these setups don't go immediately. I'm showing you trades in advance. So when you eventually watch the video, it will still be valid for you. If I show you a trade that is going to happen within the next 2-3 hours, by the time you watch the video, it's gone. Like there is a setup on Australian yesterday that we took. Small trade. There's another small sell setup on Aussie again that is going to happen today. But that is, by the time I give you that trade and you watch a video, it's gone. It's useless. Those are trades that we take in our group, in our trading room, because I do a daily update and then we follow those trades in our trading room, which works 24/7. So all of you take care. I would see you later. And I hope to see you today in that webinar. It's going to be interesting. Well, I promise you that 5-series educational video. It's going to be about 3 because I'll combine them. The first one that I wanted to show you is going to be what I'm going to do today. So if you join me there, you will get to see it live. You may get to ask questions. If not, I'll post it on YouTube for you guys. Take care. Thank you. Bye-bye.